Hello everyone and welcome to my daily report market analysis videos with me, Richard Perry, market analyst at Hantec on Tuesday the 21st of January. We've got a fairly risk negative outlook today. There's been a number of factors that have been driving this move. The US was out of the game yesterday. They had Martin Luther King Day, and since that has happened, we've seen that a few negative bits of news flow have come through. You've seen Moody's rating agency downgrading the credit rating of Hong Kong in light of the recent protests, and also you've had the IMF downgrading or downwardly revising its global economic growth outlook as well. You've got this coronavirus in China, which the market doesn't really know how to necessarily price that in yet. So it's sort of all added up towards a little bit of a risk negative outlook today. You can see that through the equity markets, certainly quite strongly lower, about 1% off on the CAC and the FTSE. The DAX about 0.5% lower, and you can see the S&P 500 futures about 0.4% lower as well. Broad risk negative outlook on the forex majors as well. The Japanese yen performing well, the New Zealand dollar, Australian dollar and Canadian dollar all are also weaker, and we're starting to see this coming through just across broad markets really. You can see that through treasury yields falling around about 5 basis points off Friday's close on the 10-year, and also the 2-year yield quite lower as well. And look at this move here, the classic move of risk aversion, actually, where the Japanese yen has sharply weakened today. Now, again, Japanese yuan. Sorry, the Chinese yuan, not the Japanese yen. The Chinese yuan sharply weakening today, and that's sort of coming as I said, the coronavirus in China. Market not entirely sure exactly how to play that one. So at the moment, the Chinese yuan is under pressure. So risk appetite pretty negative at the moment. Now, in terms of data points today, we're pretty much European focused initially, and we're looking out for UK employment data, which is out imminently, and expected to see unemployment sticking at 3.8%, but average weekly earnings just dropping slightly there, and I'll show you the chart of that. And average weekly earnings just dropping back to 3.1%. So is that a rolling over? That would be at more than a 12-month low. It's a 14-month low for the average weekly earnings growth. But obviously, as you can see, inflation falling away, and there was a quite significant downward surprise on headline and core inflation last week. So still, real wages growth is still there of over 1%, well over 1%. But as I said, falling average earnings is not great necessarily. So that's in a little bit, but also we're looking out for the German ZEW. Now, the German ZEW economic sentiment is expected to improve to 15. Now, 15 on the ZEW is a good reading, because you can see that is actually the highest it's been since, well, February, March 2018. So almost a 2-year high on that ZEW. Also looking out for the current conditions improving, which would be up to, I think, let me just get that back up. Current conditions minus 13.5, so that would be the highest it's been for a good few months, but also 3 months of improvement in a row, and you haven't seen that since 2018 or the beginning of 2018 either. So some decent numbers looking like there, but that is, broadly speaking, the only real data points to look out for today. So my chart of the day is Sterling Aussie. Are we seeing a sterling just turning around again? Well, Sterling Aussie has been trending higher quite consistently. Look at that, since July 2019. So that's a 6-month uptrend. Look at the number of times that uptrend has been hit as well, used as the basis of support. Now we've retreated back to that uptrend with this downtrend over the past 5-6 weeks, but that downtrend now with this morning's move is being broken, and we've seen a move above, initially above 109.9, big figure, and you can see that the momentum indicators they're fairly neutral actually. RSI back above 50 though is encouraging, but you'd want to see RSI continuing to improve above 50, and it looks as though the improvement in momentum is just beginning to take hold again. You see that uptrend of the medium-term outlook still positive there as we speak, above 190 big figure. And I think the outlook is looking fairly much for improvement there as the sterling just begins to strengthen again. I think we've just had out the UK employment data, and yes we have, and we've seen unemployment sticking. Yeah, better than expected weekly earnings, so that's going to be sterling supportive, so that's why we're seeing sterling pulling higher as this moves. So it looks like sterling is regaining some strength, and against the Aussie, it looks like sterling Aussie is breaking that downtrend, looking set to pull into an uptrend. You can see that on the hourly chart, where you see strengthening momentum across the board on the hourly. A run of higher lows now forming, breaking out above 1.9 big figure, so you'd be looking at any sort of retreat back towards 189.60 to 190 big figure as being a buying opportunity. That's a basis of support around that area. Nice basis of support there. So little retreats in sterling Aussie being seen as a chance to buy, certainly with this decent wage growth numbers coming out from the UK today, in light of the fact that inflation is still falling. So real wages going up. So I wish you good luck in your trading. Click here to subscribe to our analysis videos and go to our website to sign up for our webinars.